Commodities and what's happening there, some profit booking in some select commodities like silver, copper. Manisha is here with what's top of mind. Manisha, over to you.
Oh, well, yes, this is absolutely in a market lingo when they say the fun begins. This is exactly what we are looking at after that one-way rally that we saw in 2025 and exactly how 2026 began as well. Overnight finally has started with some profit-taking, and Asia seems to be following up on that right now. So this is what we've done in the overnight markets. You've seen silver decline 4%. Gold was down more than 1 percentage point. You have platinum, copper down between 3 to 6% as well. Same is the case with palladium as well. One, this is after that very strong rally that we've seen into the markets. So there is some profit taking coming in. The second most important reason on what you would be looking at in the next week or 10 days is the funds adjusting weight for commodities that have rallied way too more. So what happens is that this adjustment is done once in a year, and this is a rule-based process. This happens every year in the second week of January, and this is exactly what we are looking at right now as well. So these adjustments will realign weights back to the predefined targets for many of those asset classes, including commodities as well. So various asset classes have not done so well, including crude, coal, natural gas, etc. You could be looking at weightages being increased for them, and weightages for gold, silver, copper perhaps could be brought down. So Bloomberg Commodity Index annual rebalancing is between January 9th to 15th. So after end of a trading day for us is when you will start to see that happen. In any case, when you look at the last 1 week or so, Shanghai net short positions have been increasing. As per Bloomberg Commodity Index, no single commodity can exceed 15% weightage. Currently, you have gold, which is at 20%. You have silver, which is 14% versus the 9% usual weightage allowed to that. So the rebalancing can lead to selling in gold, silver, in aluminium, in copper, in platinum, in palladium, all of those commodities which have actually outperformed in the last 1 year. So the net shorts on Comex for base metals have been on a rise, as I said. When you look at the last 5 or 6 days, starting 27th of December until 6th of January, we have seen net shorts continue to increase on a day-to-day basis there. Interestingly, a lot of banks have spoken about this as well. Citi, for one, says that estimated outflows of around $6.8 billion from gold futures contracts is what you can anticipate until 16th of January, until that realigning continues to happen. It's not just Citi. You have similar statements overnight coming in from Societe Generale saying that estimate net selling in silver and gold of around $5 billion each. So more or less, all the banks believe that around $5 to $6 billion of selling is what you can anticipate in gold and silver, both of these commodities. TD Securities says that 13% of open interest in Comex silver will be sold in the coming week or 10 days. You have Deutsche Bank also saying that the index-linked selling could amount to 2.4 million ounces in case of gold, which again comes to around 3% or 4% of a decline in case of gold prices from where we are trading right now. And then you have Goldman Sachs as well commenting on that, saying that the estimate selling of $5.5 billion in gold and $5 billion in silver is what they also are expecting between 9th to 16th of January. That is when we will be looking at index rebalancing. Saxo Bank says that index rebalancing sell-off should be bought into because the structural fundamentals and the narratives clearly have not changed. So what we are looking at right now, perhaps a 3 to 4% of a correction in case of gold and 10 to 15% of a correction in case of silver anticipated because of the index rebalancing. Interestingly, traders also are awaiting the outcome of the Washington Section 232 probe. If that goes through, then that means silver is in critical mineral list, and you could be looking at tariffs coming in, and then silver prices will go higher. Now, this narrative also could be coming in by the third week of January. The markets also are looking at the U.S. non-farm payroll data that comes in on Friday. So next couple of days can be very important when it comes to commodities.
All right, Manisha, thank you very much for that. That's the commodities picture right now. We'll take